made it to the show. I'm so excited to be here.
Yeah, there's a lot to talk about.
Wah,
Another exciting day in the markets.
Yes, another exciting day in the markets. Got some good feedback from the last show that we did. Not talking about any of the guest shows, just the last show on the Silver Tsunami. Had some people sort of reach out and commiserate to some innovators who are actually working in the space, saying, yes, this is exactly why I'm working on these kind of solutions. So, look, it's a healthcare show, and I think Vic has talked about his passion around heart care things, and I know that's personal to you, and you're rolling out a whole series on the show about that stuff. And I probably will look at doing something around aging care now, because
all of a sudden it's top of mind,
dude. It's brutal. It's brutal, and it's really just the learning curve on it is you kind of go from being a complete idiot to being much, much smarter, and also nowhere near smart enough to actually save yourself from the pain and the trauma of the experience. And so, I'm in awe of just how complicated it is, and how embedded and enmeshed all the different dynamics and emotions and just the whole thing.
Well, and if you think about how much support and books and guidance there is when you have a child.
Yeah, right.
And then the lack of that when you have to take care of your parents, which is not that dissimilar. I mean, it's a significant undertaking that's really important and personal. And I think that there just hasn't been a vehicle to really share. Like, you're learning a ton about it right now, but then you won't need it again.
Yeah.
And so, like, it's a one-time, it's kind of like having your first child or going to college or something. Like, there's tons that changes. Because of that, the institutions or society puts in place support. And we don't have that so much. It used to be that family members kind of lived right nearby, and then they passed away fairly early.
Yep.
And that's all changing, which is great, but we haven't updated the support systems.
No. So anyway, you once again have saved the day, pulled together a good show, and I'm excited to talk about it. So let's dig in. All right. So, yes, as we talked about last week, Powell now coming out and dialing back expectations on rate cuts because the numbers are just not trending very well. It doesn't feel like we're in imminent danger of a resurgence of inflation. But at the same time, it's not continuing to go down. It's being pretty stubborn and sticky in this 3-ish range, even testing, maybe I'll go back to 4. And you can't talk about rate cuts when that's happening. So, I don't know. I mean, we saw obviously crypto markets totally bottomed. I wouldn't say bottomed out, but definitely have come back down to earth. And that's usually a pretty good sign of liquidity and where general trends are going in terms of risk on, risk off.
Risk on. Yeah.
Right, exactly.
I think biotech's been down, which is another long dated thing.
Yep.
But I think it's not surprising that inflation hasn't come down to 2%. I don't think either one of us thought it was destined to come down to that quickly.
No.
And so I think the Fed is, maybe was overly optimistic of how fast it would come down. And now they're sort of, reacting to the data they're seeing and not going to cut rates. People are frustrated on Wall Street, but the stock market's been down the last few days, but it's at close to all-time high.
That's right.
So I don't think the stock market really needs a rate cut, and the economy seems like it's doing okay. We talked about the K-shaped recovery previously, so we don't need to beat it again. But, it really helps if you own stocks and bonds in a house, and if you don't, I think it's pretty clear we're going to have higher inflation and higher rates for longer than most people want.
Yeah. And I think that relates to the next story in the Wall Street Journal here. Rents are still rising and pumping up inflation. So inside of that consumer price index, CPI, there's an entire category called shelter. And, rents are a big portion of that shelter component. And rents are, while the growth of year over year rent rates is coming down, the rate of it coming down is slowing, right? And they still are year over year going up. And so, that I think is that's a big factor in inflation being sticky, right?
Yeah. There's no question. We have a graph about it in it, but your lease payments for the place you live is going to go up at 5% this year, compared to 10, 11% last year or the year before,
right?
Which is moderately better, but it's still over the Fed's 2% inflation target. And they smooth this with the concept that people can't move out of their apartment until a year. So they take like the last 12 months in some kind of combined thing. So it kind of, maybe it smooths out how volatile the pricing is, but it also embeds high rates for a kind of a longer time. So you can see, if people are listening, there's three sort of bell-shaped-ish lines on this chart. One is the CPI itself, then there's the CPI shelter component, and then the actual apartment inflation. And as you said, the yellow line, inflation for apartments was really high in early 23. It's come down. And the CPI shelter rate is, of course, a derivative of that. So it's coming down more slowly and less high and less low. Mm-hmm. But it's all above core CPI right now. So it's still having the effect of pulling things up.
Yeah. So, I mean, I think this K-shaped economy is something let's put risk on and investor and all that kind of stuff to the side for a second. We're in an election year, and I know we've seen data that says that people are doing much better than they think they're doing, right? Mm-hmm. And at the same time, I do feel that when I talk to people in their 20s, and I'm fortunate I talk to more people in their 20s than probably the average 48-year-old because I do jujitsu. So, I spend quite a bit of time with
fighting with them, rolling around.
Yeah, exactly. And we're friends, even though, outside of this, they would be sort of junior to me, but on the mats, we're all sort of, pretty equal. And so, I just sort of look at what they are able to afford and their future prospects. And I don't want to say that they don't have I don't want to say that they don't have any opportunity, because that would not be correct, but it does feel like it's a real struggle to just kind of, I don't know, feel like you're getting ahead, if that makes sense.
Yeah.
It does feel like it's a real struggle. It does feel like your opportunity to live in an environment you might want to live in is really, sort of limited. And I'm trying to kind of think about this against what I came up in. And I didn't live in the most luxurious houses or duplexes or apartments sort of coming up. But it did feel like the path was relatively straightforward and clear for me. Mm-hmm. Like kind of every 2 years we'd kind of upgrade where we lived, and it was a pretty meaningful upgrade. Yeah. And it didn't take long for me to be in the workforce before I was able to sort of get that first house. And I remember what the price of that first house was, mm-hmm. and it was sub $300K. Imagine trying to get that in Nashville today, right?
Yeah, I bought a house in Boston. It was $200,000.
That's what I'm saying. Yeah, I mean, I think our first house was $225 or something like that, and it was nice. It was really nice, and so it does really feel like I think the median price of a house in Nashville right now is probably somewhere in the 475 to 500K range, I would imagine. And rents being high, just, it just eats away.
Yeah. Yeah. I mean, I guess the challenge is that it used to be the opportunity to move up your stage of life, your status, you're in your class, move up from middle class to upper middle class or whatever. If you worked hard and if you got a good education and really were diligent about it, it was a pretty clear path. I mean, a lot of people were not able to get into the school or get a job, but there were plenty of examples where people did. And so it felt much more like a fair game, I think, where sure, it is a lot of work to study and go to school. And then, my early jobs were a lot of hours, a lot of like grinding. But you could see around you other people also sort of having success. And I just don't know if those opportunities are as clear now. I mean, there's a lot of debate about whether colleges are worth it or not, or which ones are worth it, and how much debt to take out. And some of that is media craziness. Some of it is true, though. I mean, the prices are really high. And then there just aren't as many role models, I don't think, where like someone who is 28, nothing lucky happened to them, that they just like worked hard and they bought their first house and they bought another house that was a little upgrade. I don't have hard data for it, but it feels like the opportunity to pull yourself up from lower middle class to upper middle class, or from, blue collar, your parents didn't go to college, to now middle class. That's a harder journey now. It doesn't seem like it's as easy to do.
Yeah. I guess one of the feelings that I've been observing in myself is that I've felt less comfortable celebrating any of my own successes, and also being overly encouraging of like the entrepreneurial lifestyle, because I'm just kind of like, it's really hard, and I feel like to some degree I was the beneficiary of a window of time that I was able to sort of come up in, I feel like when you and I met was a little bit of a golden era in the space. And, some of the things that I was able to achieve during that period of time, are just due to the fact that I got my first Twitter account in 2007, but now things are so saturated, it's so hard to stand out. Capital is not readily available. And so if you don't, if you don't know somebody, or if you're not one of the lucky people to get a check from a Jumpstart Foundry or Jumpstart Capital or Jumpstart Nova, or take your pick of the VC firm, man, getting that first gust of wind under your wings it's just not. I don't know.
I mean, I guess the hope is that AI and Web3 blockchain stuff will open up new opportunities for people that want to learn and want to really work. We had our portfolio kind of peer AI collaboration thing this morning. And today was like show and tell. What have you built? What have you done? Like learn from each other. And one of our portfolio companies, who's not a developer, he attended a hackathon, and it was a one-day thing. And so he built an AI-based tool in 2 hours using OpenAI, so it's like $20 a month.
Right.
And prototyped a tool that was like sort of an add-on to his existing startup that he has. He has a behavioral health company, and he created an adjunct kind of piece to that in 2 hours. And now it's working, but it's not HIPAA compliant. It's not, ready.
Sure.
So he's paying a developer to, kind of put it on his own server and get it where he can actually use it in healthcare.
Nice.
But he's going to charge $50 a month. And I don't know if that will work, that one example, but he was able to do that just with his effort and reading and trying to figure it out. I'm sure there were several tries in that one day. but he spent a Saturday, and through his kind of hard work, he now has a second product. So I think it is possible, but there are fewer opportunities. You can't just sort of show up. Like I kind of just showed up to college and then found a startup in 1993, as Windows were just being adopted. And I think those easier opportunities are not as much around.
Yeah, so you're making a good point, which is the one thing that is easier now is the ability to be very prolific. It's theoretically easier to be very prolific. Yeah. It is not actually easier, maybe from a mental health perspective, maybe from an energy perspective, maybe from an inspiration perspective, maybe from a how do I tune out all the noise and stop consuming all the time and actually like just focus on being a creative, person as opposed to a consuming person, right? That's a big shift, and there's just so much energy that goes into society telling us to all consume all the time instead of create all the time. But if you can get yourself oriented around creating, the ability to just be hyper prolific right now is unparalleled. We've never been able to put as many shots on goal, high quality shots on goal as you can today. So I guess that's kind of the answer, right? I mean,
that's the answer to our upward mobility challenges.
Right.
It's also the answer to our national debt because we have to find productivity and grow our economy without the government just subsidizing everything, because that's a sort of a never-ending cycle.
Yep. So
that's the hope, that AI is going to be this savior. I don't know if it's going to be enough to offset some of the challenges, but it's a bright spot or a silver lining.
So UnitedHealthcare, they announced earnings, and I saw a notification on my phone this week that said, because I watched the stock, that said, UNH is up 5%, and I just sort of chuckled when I saw it, right? Because I mean, of course, they really just don't miss, and in the midst of probably one of the toughest quarters for them,
in the history of the company,
and certainly we can say the last decade, right?
Yeah.
Easily one of the hardest quarters for them in the last decade. They are up more than 5%. Now, they were down over the course of the quarter because of everything that happened with Change Healthcare. But to still come out and beat EPS and rally and get a 5% bump post-earnings is remarkable.
Yeah.
It's remarkable. And I think it demonstrates some of what you and I were talking about as the whole thing was going on, because we have intimate knowledge of the company, Change Healthcare, prior to the acquisition of, by UnitedHealth Group, which is there aren't a lot of organizations that could have absorbed this.
Yeah, that's right.
So look, kudos to the team at UnitedHealth. They have to be feeling incredible that they were able to, come into investor week, come into earnings week, and deliver an EPS bump and a 5%, bump in price for their shareholders after a really, really tough quarter.
Yeah, I mean, every company has tactics and little things they can do to try to make their earnings come out with where the street expected them. United has a lot of those, but it's significant that they were able to hit that, and they had to turn off all the utilization management stuff because it was the Change Healthcare outage was causing so much challenge to the providers cash flow wise that they said they optionally decided to turn off all of their like pre-approval thing, pre-auth stuff. They turned all that off, and they still were able to hit an MLR of roughly 85%.
It's ridiculous.
Yeah,
it's ridiculous. Yeah, and they were transparent that this is going to cost them over $1 billion.
Yeah,
still got the stock bump.
Yeah.
Right. You take your medicine, you price it in. I have firsthand knowledge from portfolio companies that Optum was offering loans. And I don't think they were spending a whole lot of time underwriting those loans, right? So I think it probably felt not dissimilar to everything that happened during the pandemic and kind of like stimulus money flying out the door. So somehow they were able to manage sort of at least for their little universe,
Yeah.
a pandemic-like stimulus effort, turning off prior auth, and still nailing the number, beating the number.
Yeah. Yeah.
And the reason why I want to make a big deal out of this is like, how many companies do you know that could do that?
Very few. 3 or 4. I mean, like
that could take $1 billion unexpected hit, have to give out loans to a whole bunch of their partners, customers, vendors, providers, et cetera, and still beat earnings.
Yeah, they are just a machine.
It's stupid, man.
Yeah, yes.
It's just ridiculous, And if you don't understand that, then you've never tried to run anything. But sorry, that is just it's crazy. It's crazy. Okay, so along the lines of the whole cyber attack stuff, this one kind of flew under the radar over the course of this last week. Obviously, we've the big headline in the world is the whole Israel-Iran situation, right? So a lot of things we're not going to crest above that. But Microsoft got hacked, and it's a pretty serious hack because it was like their cybersecurity team's emails were hacked, and so the Russian hackers are back at it again.
Microsoft works for the federal government, so that's what they were really attacking.
Yeah, exactly. It's well, look, this is the same thing as the Change Healthcare thing, right? The Russian hackers are attacking the private companies as proxies to get at the United States nation state.
Right.
That's what's going on here. So they're going to keep doing that.
They're a vulnerability point.
That's right.
Yeah.
Our government does a lot of business with our private market, private sector.
Right.
And that creates a vector of vulnerability, right? Just attack the companies that our government depends on, like UnitedHealth, like Microsoft.
Right.
And so this is pretty bad. And CISA, which is the Cybersecurity and Infrastructure Security Agency, published an emergency directive requiring all these different effective agencies to study their different stolen emails and look for leaked logged in information. But this is probably the beginning of, a much larger investigation that happened and pretty much flew under the radar. I think most people didn't even see this happen.
Yeah, that's right. And then I heard a podcast talking about, I couldn't find the news story, but T-Mobile and Verizon reported, I think it was 5,000. A lot of their employees were getting text messages and offers, $300, $400, $500 if they'd do a SIM swap over Signal.
Over Signal?
Yeah. Well, so it was a message saying, if you're interested, hit us at this Signal place. And the podcaster was saying it's, if you ask, back to the K-shaped economy, you ask 5,000 low-level employees, they have access to they're in the Verizon store, in the T-Mobile store.
And how many do you need?
You need one or two.
That's right.
Swapping a SIM number means like my phone bricks, and someone in Russia is now managing my account with all my stored passwords, all my stuff I've saved, and I'm on Android, but whether you're Android or Apple. And so that's it's just another example of where you take a vulnerability and it can just expand out.
Hold on. And I know this is at least true with AT&T. They've moved away from physical SIM cards.
Yeah.
It's all eSIM now.
Right.
So it's like Signal based. It's not.
Yeah. So you can swap it out from the store.
From the store.
And the user has no, you open your phone and now you don't have a account anymore. So, I feel like people who never programmed have never actually thought about all the vectors for attack. And so as all these things get easier, they don't understand the trade on security when you do these things. And I'm just like, I used to program. So I'm just like, oh my God, dude, this is it's
more and more fragile.
Yeah. It's impossible in my mind to expect us to keep all these bad actors out. They're not going to be kept out. We're going to be continuously hacked just because there's a lot of vectors they can come at, and there's a lot of people trying to do it. So,
all right. So that was a little departure on the cybersecurity thing, just because we were talking about United. So moving on back to the payer side of things, Elevance, they also beat earnings, and so their stock was up nearly 5% after releasing their results. And Elevance is kind of trailing UHG, but making a lot of moves. And I think they just also announced a partnership with CD&R. And their Memorial Health unit around doing primary care. So more and more partnerships.
Yeah, Elevance is they have the Carillon platform, which we've talked about before. It's very similar to Optum.
Yeah, it's modeled after Optum. They name things the same as Optum, and they're moving very, very quickly to acquire things to make sure they have feature parity with Optum.
Right. Yeah, and so partnering with this private equity firm, CD&R, that we know, is going to help them sort of not catch up to United, but get some more scale, and they can be really effective, I think, at sort of doing maybe a smaller version of what United and Optum are doing.
Yeah, so CD&R had a company called Memorial Health, and then they also bought Castlight, and then they put those together. They got the guy who used to be the president at Cerner. I think Don Trigg is his name, and now he runs that company. It's called Apri Health.
Okay, yeah.
And so it's got advanced primary care, but then it's also got all the Castlight stuff, which is all the transparency stuff, but also like the digital health hub. So like all the different apps are sort of built into the infrastructure, and it's all vetted, and like the different partnership deals, et cetera. So it's a total package for employers is kind of the model. So I think Elevance just said, we're never going to be able to build that. We're trying to have feature parity as quickly as we can with UHG.
Right.
And so we'll just partner with CD&R. CD&R already through Apri Health had a partnership with JP Morgan and their whole Morgan Health initiative that happened after the whole Haven.
When Haven
imploded.
Right.
JP Morgan continued to do Morgan Health, but they were like, we're not going to do it internally. And they partnered with Apri Health to kind of roll out everything they're doing there. So Apri Health is getting some pretty big partnerships, Morgan Health and now Elevance Health. This pretty major.
Yeah. And then CD&R put another thing, Millennium, which I didn't know. It's another portfolio company of theirs.
Yeah. So Millennium is I think it's a value-based care physician group. And I think they were based in Florida. But yes.
Maybe it's it looks like it's an orthopedic group. They're talking about joint primary care.
Yeah. Okay, that makes sense. So yeah, I mean, it's a pretty big deal, and I think it also just shows where forward. Look, CD&R is a very forward-thinking private equity firm. They're not kind of like your old school financial engineers. They incubated and created Agilon as an example. So they're more on the like creative. How do we like create new value?
Create value, grow it. Maybe bring in a stronger team.
Yeah,
acquire something in a different geography. Yeah,
take it public as opposed to like just sell it off. And so like partnering with Elevance, I think that's pretty interesting because we think a lot about PE generally just in terms of like health systems, and we're going to talk about that in a little bit here. But the idea that some of these payviders who are behind in terms of building out their stack might just partner with some of these private equity firms. Welsh Carson's another one that comes to mind that might have some assets that would be good for some of these groups to partner with. So it's just kind of an interesting dynamic that I don't know, hadn't really thought about before, but could be a way for the other payviders on the scene to like advance what they're doing.
Yeah. I mean, again, the payviders have already been ahead of the health systems, and they seem to be moving very quickly.
Yep. And then, unfortunately, Walgreens had their fourth round of cuts. So Walgreens is still kind of, I think, rebooting. Had a leadership change last year, and they're continuing to try to figure out who they are. I think. Right. This round of layoffs was largely corporate workers. So top of the food chain probably means that there's a lot of different business lines that they are just going to get rid of. And so, probably don't need, SVPs and VPs of business lines you're not going to continue to run. So over the last year, they've laid off 900 corporate employees. So that's some pretty big shedding.
Yeah.
And they've got $1 billion cost cutting plan that they're currently working through. So, look, that sometimes you got to do that to for the long-term viability of a business, we certainly understand that.
CVS certainly started this transition several years ago, and so they've been a little bit ahead. Walgreens has started to make that transition from the corner store that also you can pick up your drugs at to more of a health care company, but it takes a while to sort of move to that basis.
Yep. All right, so let's stop there because we have a pretty interesting run of stories, I think, after we come back from breaks. We'll let Doug share a little bit about Jumpstart Foundry, and we'll be right back.
Thanks, guys, for the opportunity to talk about our pre-seed fund, Jumpstart Foundry. My name is Doug Edwards, CEO of Jumpstart Health Investors, the parent company of Jumpstart Foundry. We're so excited to be able to talk about early stage venture investing, certainly the need for us to change the crazy world of healthcare in the United States. We are spending 20% of our GDP, north of $4 trillion a year on healthcare with suboptimal outcomes. Jumpstart Foundry exists to help us find and identify and invest in innovative companies that are going to make a difference in healthcare in our country. Every year, Jumpstart Foundry invests a fund, raises a fund, and deploys that across 30, 40, 50 assets every year, allowing ease of access for our limited partners to invest to help us make something better in healthcare. Some of the benefits of Jumpstart Foundry is there's no management fees. We deploy all the capital that's raised every year in the fund. We find the best and brightest, typically around single-digit percentage of companies that apply for funding from Jumpstart, and we invest in the most incredible, robust, innovative solutions and founders in the United States. Over the last 9 years, Jumpstart Foundry has invested in nearly 200 early-stage, pre-seed stage companies in the country. Through those most innovative solutions that Jumpstart Foundry invests in, we also provide great returns and a great experience for our limited partners. We partner with AngelList to administer the fund, making that ease of access not only with low minimums, but the ease of investing in venture much better. We all know that healthcare is broken. Everyone deserves better. Come alongside us with Jumpstart Foundry, invest in making the future of healthcare better and make something better in healthcare. Thank you, guys. Now back to the show.
Okay. This is another one of those interesting storylines. I love when you find these, Vic. I love when you find hey, there's just a bunch of stories coming out about this one topic.
Yeah. Well, actually,
what's going on?
To be honest, a subscriber emailed me saying, check out this story. And it was this Beckers story. And so I looked into it. And so Beckers has a story out. It came out last week, which is why I guess I heard from the subscriber.
Okay.
And I had missed it, honestly. And it's talking about this this thing called a private equity state risk index and how 10 states are really at risk. Their healthcare infrastructure is sort of at risk because of private equity. That's the Beckers story. And so that's interesting. Beckers always is kind of like short, quick hits. And so I looked into sort of the story. And then Fierce Healthcare had another story that came out today, or maybe it was yesterday, talking about bankruptcies in healthcare have spiked that are private equity backed. And it sort of summarized a bunch of stories that we already have covered and are not new. But they published it. And so
and they cite the same
the same index. The same index.
Yeah.
Right. And so this is the second time there was a drug pricing thing.
It was the PBM thing.
Yes.
Yeah.
So there's a group, I can't figure out who is behind it, but it's a lobbying or public relations effort.
Well, it's a nonprofit.
Yeah, it's a nonprofit. I don't know. I mean, aren't all lobbying things nonprofit? Maybe not.
No, they're not. But this one is a nonprofit.
This one is a nonprofit, and it's hard to tell. Maybe it's impossible to tell. It's hard for me to tell who is supplying the money or what it is. But it's called the Private Equity State Risk Index, and they are publishing information about private equity creating risk for housing, healthcare, jobs, and pensions, sort of infrastructure that is important to all of us by state. And if you go down, they have a cool map of like red, yellow, green. Tennessee is red. And this is how vulnerable or how much exposure to private equity each state has. The scoring system is difficult to unpack.
Yeah, they have a whole methodology that you need to spend some time reading.
And I don't know if a lot of private equity people would fully agree with their methodology, but it is getting attention, and it's a well done public relations kind of site. So it's going to keep getting more stories, I think.
Yeah, well, it just kind of shows you like how you can just create an index and you can create a methodology and you can add up some numbers and then you can rank some stuff. And then all of a sudden, like
the Tennessee risk score is 83.
Yeah, 83 out of 100.
Right,
and Tennessee is at big risk of private equity, ruining our healthcare system.
Right. So the sound bites to reporters or politicians
exactly.
is going to be tempting.
Exactly. Like that's the thing, right? Create an index, create a methodology, create a nice little interactive map.
Just rely on the PE firms to be unorganized and not do anything.
Yeah,
which is likely.
And then create a nice little leaderboard here where I can sort. And now I have my top 10 because that's all. Look, I'm doing blogs. I got 3 a day. I got to knock out. I need a top 10 list. So
you either need a top 10 list or you live in Florida and you work for a report or a newspaper in Florida. And so you can go to the Florida one and figure out how should I spin it here?
Right.
So, I mean, private equity certainly does plenty of things that are not good, but they also do a lot of things that are good. And we're just sort of grouping everything together.
Yes. Big bad
in a
private
way
equity.
That's not that helpful, I don't think.
Yeah. But it does illuminate the strategy of how you can, if you want a bunch of news outlets to cover your topic, I feel like the old school thing used to be have relationships with the reporters, hire a PR firm, et cetera, et cetera. But we're seeing more and more. It's create a nonprofit, have that nonprofit do research and generate reports. And this is really strong. Generate a risk index. Right. And then
make it easy for Beckers.
Make it easy. Yeah. Now you just send this out and now everyone, I already love talking about how private equity is bad for healthcare. Now I have data points to prove it.
Yeah, I can reference this other source that whether it's credible and really well done or not doesn't matter.
I mean, who are these people?
Yeah, I have no idea. You can't figure it out.
And by the way, I'm not saying it's wrong. I'm simply saying like it's a website.
Right.
With a map, with some colors, with some numbers.
Right.
And a leaderboard.
Yes.
And some methodology.
And so I expect we're going to see more and more private equity news stories about bad things. And partially it's deserved and partially it's not deserved.
Yeah, well, the Steward Health thing, I think, has got everybody up in arms. And so it does feel like as we are in an election year, for some politicians, this is a stump story. And I don't know, this website, privateequityrisk.org, is probably going to get a lot of hits over the course of the next 7 months.
Yeah.
I would imagine. All right. So let's see here. Oh, this was a not so awesome story. And I hope it just stays kind of trivial, but it sounds like the World Health Organization is warning that there is a threat of bird flu spreading to humans. And that is because it's been spreading pretty aggressively amongst cows. And they are saying that cows' biology are similar enough to humans' biology that even though so far bird flu has killed less than 1,000 people over the course of the last 20 years, there is an increasing outbreak amongst cows. And so they're just worried about the mutations getting to the point where it can be transmissible across people. Is that basically what's going on here?
Yeah, there's been 888 humans that have gotten it. Okay, so humans can get it. There never has been a reported case of a human getting it from another human.
Right.
So that's the mutation that WHO is worried about that has not happened yet.
Hasn't happened. And I misspoke. So it was 888 cases, 52% were fatal. So that's a high fatality rate.
Yeah.
But it's a very, very low number of people who have actually gotten it, right? So that's kind of that's what you're working with there. 1 in 2 people who get it die. So that's pretty serious.
That's right. And I think you're exactly right. Bird flu was not likely to be that dangerous to mammals, which we are, but now it has already progressed to cows and I think a couple other mammals. So that, I think, made WHO more nervous. But yeah, it's a warning of something that might be an issue in the next couple of years. But I think it's really deadly. So we want to watch it.
Yeah, I mean we've been free of any serious things since COVID, and it's been a couple of years, and look, I mean SARS, Ebola, I mean there's all sorts of stuff that flies around out there. So at some point, I think it's more of a when, not if, there will be the next viral disease, and
hopefully we'll get a little while more.
Well, hopefully it doesn't have a 1 in 2 fatality rate.
Yeah.
I mean that's no bueno. All right, so this Memorial Hermann story, this reminds me of the what was it, the New York Presbyterian story?
Yeah.
It's similar to that one,
yeah,
right?
Just kind of like
inappropriate doc behavior.
It's not quite as evil as that one, but it's still pretty bad.
It's bad ethical.
Yeah. So
bad ethical story.
Transplant physician in Houston at Memorial Hermann. I think it's right to say he's been accused. I don't know where he is in the process, but they have stopped the transplant program, and the allegation is that he was changing the applications of transplant potential patients because he knows what the algorithm is of like who gets the liver transplant, who gets a kidney, and who doesn't. And so he would change their BMI, their age, et cetera, in order to help them, but then, of course, disadvantage other patients.
Disadvantage others.
And you can't – obviously, that's unethical. You can't do that. So they have stopped the program during investigation. But it's just it's kind of a sad story. I wish we didn't have these stories, but – the health systems need to get their act together about trust and reliability, and then they need to work on that.
Yeah, and here's the real bad thing. In the wake of the investigation, the program is suspended.
Yeah, so they're not doing any transplants.
Exactly.
Now, I think the organs will go to Vanderbilt or go to Mayo or go the organs will go somewhere else, but not to those patients.
But they clog up another pipeline, and it's all going to be slower for a bunch of patients who are waiting to get a transplant, right, who are on the list. So it's doubly bad. Like, the original sin is bad, right, because you're not supposed to advantage some to disadvantage others. But then the fact that the course of action in order to remediate this is to suspend the program entirely. I mean, can you imagine being a family, with a loved one or being the actual person on that list and imagine being like 2 away or something like that. And now it's like suspended.
Well, hopefully they will do the investigation and turn it back on in a month or 2. But yes, any amount of time. Day is not good.
Just the anxiety of every day knowing, you did nothing wrong and now this program is suspended. I mean,
it's terrible.
I think it just illustrates how high the stakes are in this industry, and how things that would not be that big a deal at all in other industries are so huge in this industry. This is a hard industry that really tests us as humans. Tests our conscience. It tests our morals. It tests our ethics. And the costs are high when we fail.
Yeah.
The costs are really high when we fail.
Yeah. My first boss, 100 years ago, he was talking about on the first week about our values and ethics of the company. And so we went through them. And of course, we had like things on a piece of paper, our values. But he ended it by saying, this is all great and we've created this list, but what I want you to think about is, if your mom is driving home and she saw what you're doing put on a billboard, would you be proud of that? And I think that's I've carried that with me. It's something that, like, even if the letter of the rule or the law allows you to do it, there's some things that just you shouldn't do. Like, you shouldn't give a patient that you happen to know or like an organ and take that organ away from someone else who, by the algorithm that, these algorithms, doctors and surgeons fight over them in detail, like the BMI and they've quit smoking and how far away they live, all the different details. And you should just live with that.
Yeah.
Anyway, so hopefully they'll come back online soon.
All right. And now our weekly AI rundown. So first and foremost, we've got AI identifying new potential treatments for Parkinson's disease. Obviously, great news. But I think what underlies this is not so much that AI is figuring this out, but it's how AI is accelerating the ability to figure this out. It's really a drug discovery story more than it is a specific Parkinson's story, right? Because you could swap out Parkinson's for, a myriad of other diseases.
Yeah, the what caught my attention is they reported in Nature that they were able to search 1,000 times faster than they would have been able to before AI. They were basically looking at small molecules and what could have be effective against Parkinson's.
Right.
Which is great and a good use case for AI. It's going to really help the R&D process, which we need, because there's less from federal agencies as far as basic science. There's less dollars being invested every year. And the biotech industry, we still want new drugs to come out. So we need to do more with the slightly fewer federal dollars coming in.
Back to our discussion about AI making us a more prolific, productive society. If you sort of just tease this out and scale it out, let's say AI not only speeds it up, but also in some way, shape, or form lowers the cost, right, of drug discovery.
Yeah.
Then you can imagine a world where not only does it, go 1,000 times faster, but it increases the number of submissions to the FDA for approval by 10x, by 100x, right? And so the FDA is going to have to meet this this increased prolific inbound with their own systems. They're going to have to deploy AI as well.
Have to get efficient too.
Yeah. They can't become the bottleneck that stops diseases from being cured, right? That's not and I know people are going to be like, what are you talking about? They already are the bottleneck. Like, right. I get that, but this is going to be this is one of the true highlights and great applications of AI. There's so many things about AI that are really scary, but increasing and improving drug discovery, with a chance to eliminate diseases, especially when you combine AI with gene and cell therapies.
Yeah.
This is one of the great uses of AI, right, for humanity. And the FDA can't just continue to operate business as usual once we start having a multiplier on the number of submissions for approval. That's not going to work.
Yeah, I think the FDA will react to politicians pushing them. They have already gotten much better than they were 10 years ago. Now they don't focus on how effective the drug is as much anymore. They've skewed much more towards this is safe, and so we're gonna put an approval with a bunch of caveats in it that has been complicating the reimbursement side. But I think the FDA will react, and more candidates getting clinical trials and getting evidence and learning more is a good thing. So hopefully the FDA will respond.
All right, Boston Dynamics released some footage of their new humanoid robot, Atlas.
Yeah.
I think this thing is so cool. It's double jointed.
Yeah. Yeah.
It's like of course, if you could design humans differently from day one, like what is one of the things you would do?
Yeah, I would love to be able to spin all the way around, and
it's so cool to watch this thing like get up from laying down on the ground.
Right.
And you're just like, man, I wish I could get up like that.
Yeah.
Right. You know, it's so I think that's like an interesting thing, is to think about not just robots, mimicking our current human design, but finding the limitations and sort of just bypassing those limitations. And what does that do to physical labor when you bypass just built-in limitations of the human, body?
Yeah, and there's a lot of jobs that are not that safe for humans.
Yeah.
And people die in the workplace. And if we can have robots doing that work, it'll be more effective and safer. So it's great.
Anyway, go check out this video from Boston Dynamics with their new robot atlas. It's just cool.
Yeah.
It's just cool, and it also kind of like really is starting to look like iRobot. Like they're getting pretty close now. I mean, this thing is fairly agile, and it looks like it could at least do a nice little jog and not look that clunky. So we're getting there. All right, final thing. So HuggingFace, which is kind of the big open source repository for large language models, large action models, large media models, and just basically all AI models.
They have their own models, but they also aggregate.
It's really more
together.
a repository than
Right.
it is like, the home of their own stuff.
Right.
And it's cool. Like you can go on there and just like search all sorts of models that are contributed from around the world.
Yeah.
It's really great. But anyway, you found that they've got a leaderboard for medical large language models.
Yeah. So they have made the determination that medical use is a special use case that should be graded and keep track of the leading large language models for this application specifically. And there's multiple ways they test it.
Anatomy, clinical knowledge, biology,
Right.
college medicine, genetics, professional medicine.
It's all the accreditation steps in the journey to become a doctor and several others. And then they run the language model up against that and just give it the test. And I like it because it's a pretty independent source. I mean, they're advocates of AI because they're running the system. But I think they are doing these tests pretty independently and then just publishing what's best. And they put it on this leaderboard. OpenAI's GPT-4 got the number one by a very small margin over Google's MedPalm 2 by half a point. But the takeaway I think is that there are many models that are very good and would pass medical boards across the line. They're passing everywhere, and some of them are free and open source. And so you can go to Google that does MedPalm or OpenAI that does GPT or an open source one, and they're getting better every day, but they're already pretty darn good.
I just think the idea that GPT-4 base is the top rated model for medical LLMs. I mean, talk about something I did not anticipate, right? So we're seeing all these huge funded rounds for these startups. Now granted, their LLMs are proprietary, so they're probably not listed on HuggingFace and are not included in this assessment or this ranking, right? But the idea that GPT-4 base out of the box is pretty damn good across the board in terms of medical knowledge. I don't know. It just, to me, continues to reinforce that the opportunity in innovation with AI for most of us is going to be leveraging existing LLMs into great interfaces with great workflows, with great use cases that are very, very specific and validated to actually provide outsized value.
Yeah.
Right. And not like creating your own damn LLM.
There's no reason for anyone listening or anyone that doesn't have $5 billion to try to do their own LLM. And even if you did have $5 billion, I don't think that's
I'm not
a good
sure
use
that's
of it.
enough.
Well, it's not enough, probably not enough. And then there's not a business model, I don't think, at this point as a late comer to the market. This does show private models if they're willing to let HuggingFace play with it.
Right.
So maybe not everyone did, but
Yeah.
But I think my view is that there's going to be diminishing returns, right? Like GPT-5, GPT-6, the Google next version, they will get incrementally better, but they're already really good. And it's fine that they'll get better. It's good that they'll get better, but it's going to be how it gets integrated into the workflows and like how people start knowing how to use it that I think will really make a big difference in the next year. The models will keep getting better, but they can't get, the top one got an 87 across all these tests, 87% of 100.
And it's GPT-4.
Yeah. It's available.
ChatGPT.
Yeah. I pay $20 a month and get to use it.
That's what I'm saying. So like in my pocket right now on my phone
Yes.
is probably a better doctor than my doctor. I mean, that's crazy to say,
Yes.
but you know,
Yeah.
and now, am I going to put my personal data into OpenAI? No, I'm not doing that. So that's, there's plenty of upside for my doctor for the foreseeable future. But look, I mean, we're going to, just in terms of having recall and the ability to respond to prompts over a large base of knowledge.
Yes.
I mean, it's kind of already here.
Yeah.
In our pockets. That's just crazy that's the case.
And Google allows 1 million tokens in the context window. And everyone's so you can put your entire medical record and your entire family's medical record and a bunch of
And you're not even close to 1 million
and
tokens.
you're not close to 1 million tokens.
No.
So you can just like dump your entire situation into it as you're asking the question.
Probably plus your genome.
Plus, yes, right. Yeah. So the models are incredibly powerful, but we aren't really using them that effectively right now. A lot of it is generating, videos or blogs of average quality, but that will change over time.
Well, I feel like I talk about Nick Holland every show, but
we need to have him on probably.
Yeah, we actually should have him on because he's really interested in healthcare. But for listeners who don't know, Nick is he's the head of the marketing / content hub at HubSpot. So he's a good friend of ours. And he was talking about sort of what they are realizing at HubSpot because they just rolled out like all these new AI features and just like now that they've rolled it out, it's HubSpot. So they have a huge user base, right? And they great at tracking sort of usage and stuff. And they're like, the tech is way ahead of the usage. Like we've rolled out all this AI stuff out there and it's overwhelming people. Mm-hmm. We don't know how. I don't use AI every day. I don't. Yeah. I mean, I think you use it more than I do. But I do not use it every day. And
I've tried to carve out an hour and limit it that because you can go down a rabbit hole and be like, wake up and it's like 10 hours later and you learned a bunch of stuff that you can't have any application for. So it has to be kind of gated. At least for me, it has to be gated.
My problem right now is my time is probably over allocated to necessary productivity. I don't have enough playtime I don't have enough bandwidth for play in my schedule. So it just eliminates the utility of AI in most situations. If I'm writing, it's a good place for me to use AI. Like I'm writing for publishing and I'm like, okay, hey, here's an article, give me like a starter, let me kind of work from there. Yeah. But outside of that, I'm not using it that much. And I feel like I know how to use it. I know how to do prompt engineering. I know how to,
Yeah, but the agent stuff, that's what I was using yesterday. The agent stuff is a whole different thing. I mean, I paid $8 to get to first month of this tool. Okay. And
what's the tool?
It's called Task Aid.
Okay.
And, I've only been using it for 2 days. But at $8 a month, like, okay, I can spend that. It came with, I think it was 40 built-in agents came with.
Okay.
So there's a writer, there's a content keyword developer, there's a VC associate. and they have these out of the box agents that are, the VC associate is designed to analyze pitches and ask questions and, I don't know, help a VC partner.
Yeah.
And I don't have any work to give that VC associate yet, but I can try to figure out something.
Yeah.
Right? But
yeah.
But it's $8.
I mean,
out of the box, it has these 40. I only used one yesterday.
Well, hold on. We're in season right now for selection of Jumpstart Foundry companies, right?
Yeah.
I mean, you probably could run some of those decks through there, right, and just kind of see what it says.
Yes.
We don't have to base what we do on it, but you can at least sort of evaluate it side by side with what we would normally do during our selection period, right?
Yes.
Okay.
So here's
do that.
Yes, but here's the so HuggingFace is accurate and Nick's accurate. The tech is amazing. What is hard is for me to get the applicant's information.
Yeah.
In a form that I can easily get the VC agent bot to review in a way that is in my workflow and streamlined. But you can do that. Just I haven't done it yet, so it takes time to do it.
You know what we need? We need those kind of agents behind a Slack bot. So we can just
it connects to Slack.
Yeah. So that's what I'm saying. So you just treat it like it's a team member. What would we do if we were sending it to an associate on Slack? We'd just be like, hey, would you review this deck and tell me XYZ, right? I mean, either Slack or Asana. Assign the task in Asana or message them in Slack and just say, hey, I need you to do XYZ for me. That's the interface we are used to working in, not some other interface. So if we can get these tools behind the tools we actually use, there really should be no excuse at that point, right? Because then literally it's just a Slack message and upload the deck.
Yeah, I mean,
which is what we do today.
I haven't told Doug this yet, but I was thinking of getting this agent a Slack ID.
Well, luckily, you know the guy who runs IT here.
And an email. And then, we can name it whatever you want. The VC AI agent.
Okay.
And maybe you call it they can be slacking back and forth. Now it's not programming, but there is a configuration that is significant, right? So you have to get it. You got to get it all queued up so that when it receives the Slack message, the agent wakes up and reads it and then takes whatever action. But it's pretty close to being in the next 6 months. It's going to be. There's a lot of people that would pay $8 to have 40 people working for them. 40 not people, 40 agents.
Back to being prolific. So, okay, well, look, this is normally something we would talk about off the pod, but yeah, send me that stuff and then, I'll start playing with it and we'll figure out if we can get it behind a Slack channel.
Yeah.
That'd be great.
Yeah, it's cool.
Okay, great. All right. Thanks for sitting in on our little meeting here, everybody.
Right.
And we'll be back next week.
I'll be out next week.
Oh, yeah. I got to find a guest to come on with me. I'll figure something out.
Maybe Nick.
Hey, do you want to share a little bit with the listeners about your heart health series? Just frame that up a little bit.
Yeah. So I have heart disease, early stage, but both my grandparents died of heart attacks as well. And so I'm interested in it. And I'm also looking for just content that is a little more long lasting. I mean, these roll up news shows are really helpful, but 3 weeks from now, a lot of these news stories are not going to be that relevant anymore. And so I think I'm going to do 4 shows around heart health. I recorded the first one. It'll be out in a week or 2, which is really an overview with Dr. Sinu Reddy, who's a cardiac surgeon, friend of ours, an investor, we've known him for a long time. And I had him sit down and just explain to me, what is heart disease? How does it appear? What are the different components of it? Meant to be kind of a very basic, for the everyday person. You don't have to be a surgeon to understand it. And he does a great job sort of explaining it. We have lots of video and images and things. And I learned a ton. I think it's going to be really good. And it'll be long lasting. If anyone wants to learn about heart health, you can take maybe 45 minutes, 50 minutes and get an overview. And then I'm going to have some deeper dives into how do you do diagnostics better? Or can we do prevention? Or maybe some of the interventions that CNU and other folks do that have real specific applications. So CNU was one of the first people, I think he was the first person with another guy named Dr. Riddick to do a valve replacement. So replacing the valve in your heart intravenously through the artery, up through your thigh. Obviously, recovery is much faster because you don't have to open up the chest and all of that. So it was good. I enjoyed it. Hopefully the listeners will like it too.
Awesome. So glad you're doing that. And we'll be back next week, me with someone else on the mic. I got to figure out who I'm going to bring in here, but it'll be good. All right. See you then.